Bitcoin mining is making headlines this week, and it's not just about the latest block rewards. As prices fluctuate, miners are feeling the heat, with shifts in profitability affecting the entire ecosystem. For retail investors in the US, understanding these changes is crucial. Why? Because the dynamics of mining can influence market trends and your investment strategy. Stick around as we break down what these developments mean for you and how you can stay ahead in this rapidly evolving landscape. Bitcoin mining has been making headlines lately, and for good reason. As of this week, the price of Bitcoin is hovering around $30,000, reflecting a 10% increase over the last month. This uptick has been fueled by several factors, including the growing interest from institutional investors and a tightening supply due to mining challenges. Speaking of institutions, BlackRock has been eyeing Bitcoin mining as a strategic investment opportunity. Their recent moves signal a shift in how major players are viewing the sector. For retail investors, this means that there's a larger market dynamic at play, and it's essential to pay attention to these developments if you're considering entering the space. Furthermore, the average cost of mining a single Bitcoin has reportedly risen to around $24,000. This places significant pressure on miners, particularly smaller operations, which could lead to a wave of consolidation in the industry. If these smaller miners struggle to remain profitable, we could see a potential market correction that directly impacts Bitcoin's price. Platforms like Coinbase are already adapting, offering specialized services for miners and investors alike. This is a smart move, as more retail traders look to understand their options beyond just buying and holding Bitcoin. Coinbase's focus on this sector could provide important insights and tools for investors looking to navigate these complexities. Keep an eye on regulatory developments as well. The SEC is ramping up its focus on cryptocurrency mining operations, which could lead to new guidelines that impact how miners operate. For U.S. investors, understanding these regulations is crucial, especially when it comes to potential tax implications and reporting requirements. In summary, the landscape for Bitcoin mining is shifting, and retail investors need to stay informed. With changing prices, regulatory scrutiny, and institutional interest, this is a pivotal moment for the mining sector that could have lasting effects on your investments. This week, let's talk about how a retail investor in Bitcoin mining could experience some real opportunities. Imagine you decide to invest in a mining operation that uses renewable energy sources. You might be looking at a potential investment of around $10,000. If you choose to go through Coinbase, for instance, you could access their mining pool services. They charge about a 2% fee on your investment. So, if your mining operations generate around $300 this week, you'd be looking at a $6 fee. That's a modest cost for being part of a growing sector. Now, let's compare that to Kraken, which offers a similar service but with a slightly different fee structure. Kraken charges a flat fee of $15 for withdrawals and no percentage fee on mining earnings. If you earned the same $300, you'd only pay the $15 flat fee, which is a bit higher up front, but might be worthwhile if you plan to withdraw your earnings frequently. So, let's break that down. With Coinbase, your total earnings after fees would be $294, while with Kraken, it would be $285. While the difference seems small, over time, those fees could add up, especially if you're consistently earning from your mining efforts. But here's what nobody is saying. As the Federal Reserve continues to adjust interest rates, the cost of energy and operational expenses could fluctuate significantly. This means your $10,000 investment might not just be influenced by mining returns, but also by external economic factors. Keep in mind, too, the tax implications of your mining income. The IRS treats mined Bitcoin as ordinary income, meaning you'll need to report those earnings come tax season. If you're mining $300 a week, that's an extra $1,200 to consider in your tax filings, which could change how you approach your investment strategy. For retail traders, understanding these nuances can make a big difference in your long-term success in the Bitcoin mining landscape. So, whether you choose Coinbase or Kraken, know that every decision counts, and stay informed is your best strategy for the future. If you're considering diving into Bitcoin mining this week, here are 4 actionable steps you can take. First, evaluate your hardware setup. Investing in an efficient mining rig is crucial. Aim for machines that offer at least 50 TH/s and are energy efficient, as this will directly impact your profitability in the long run. Next, calculate your operating costs. Factor in electricity rates, which can vary significantly across the US. For instance, if you're in a state with higher electricity costs, you might want to explore alternative energy sources or consider joining a mining pool to share those expenses and increase your chances of earning Bitcoin. Third, keep an eye on tax implications. This week, gather all receipts related to your mining equipment and energy consumption. Remember, the IRS treats mined Bitcoin as ordinary income, so understanding your tax obligations is essential. Use tools like coin tracking or cryptotrader.tax to simplify your reporting process. Finally, consider staking some of your mined Bitcoin in DeFi platforms. This can provide passive income while you hold your assets. Look for platforms that offer competitive yields and have a solid reputation, like BlockFi or Celsius, to maximize your returns without taking on excessive risk. As we look ahead to the next 90 days, Bitcoin mining could face both challenges and opportunities, depending on regulation and energy prices. With the Federal Reserve's policies continuing to evolve, miners might find themselves adjusting strategies to stay profitable in a changing landscape. And don't forget, understanding your tax obligations around mining can help you keep more of your hard-earned gains. So, will Bitcoin mining become a gold mine or a struggle in the coming months? Let us know your thoughts in the comments, and while you're at it, subscribe to the channel for daily crypto updates.